Creamer Media's Mining Weekly is interviewing Arnold van Graan, the head markets research at Nedbank Corporate and Investment Banking. That is Nedbank CIB. This interview is focused on platinum group metals and where PGMs could be heading. Hi, Arnold. It's great to chat to you once again. What factors, in your view, have contributed to the 30% drop in the platinum group metals basket price in 2023?
Look, I think there's a few things that have driven that. But before we go into that, I think the first point to make is these factors we see it as short-term anomalies. Like we had short-term anomalies driving the exceptional pricing level in 2021, 2022, the same is now happening at the bottom end of the cycle. Now, I think some of the key factors that have contributed to this big drop in the price has been destocking. It's been well documented that there's been a significant destocking of rhodium by the fiberglass manufacturing industry in China. So that has contributed to the sharp decline in the rhodium price. And then there's also been a movement of Russian palladium to China at arguably at a discount. No one has put a real number on the extent of that discount, but that's another big contributing factor. But I think overall, one of the other drivers that are not so much talked about and which might not be one of these shorter term distortions that I talk about is we have seen global vehicle sales coming in lower than expected for the last 2 or 3 years or so. So essentially, we just haven't sold as many internal combustion engine vehicles as we anticipated. And I think that is part of the larger, and I would say, more challenging situation facing the market, and that has contributed to the drop in prices in our view.
And how does this uncertain market for battery electric vehicles, the EVs, affect the investment case for platinum group metals, particularly in the traditional use of PGMs in catalytic converters?
There's two elements for me when it comes to electric vehicles or EVs. The one is that it is a concern, it is a threat, but it's also very timeline dependent. I think in a longer term, 5 to 10 years, there's a real risk that we would see a significant portion of internal combustion engine demand being eroded by electric vehicles. However, I think a lot of the EV forecasts currently in the market are just overly optimistic. And that brings me to the second part of it. Because we have these very high, sometimes almost disconnected from reality EV penetration rates, it is a overhang for the PGM investment case. Essentially, people look at investing in PGMs and they look at some of these EV forecasts and some of these more bullish numbers, and they say, well, it's very hard to make a longer term bullish case for investing in PGMs if you've got this big EV risk and EV overhang. So it's really what it comes down to is EVs seems to be a perpetual overhang on the PGM investment case, more so in the longer term and I think that risk is real. But in the short term, it's almost like it's clogging the headlines. And every time you think about PGMs, you see these headlines about EV penetration rates and EV growth, and it just raises questions about the investability of the PGM sector. So I think that's having a negative short-term impact on PGM prices, and it has for some time now, and it continues, I think, to weigh on the PGM investment case, and then ultimately then also PGM prices, in my view.
In the energy transition context, what role do platinum group metals play in fuel cell and hydrogen technologies, and why is significant demand from this market not expected for several years?
Yeah, Martin, fuel cells and the fuel cell narrative has been around for as long as I've been an analyst. But I have to say that there has been a shift change in fuel cell and fuel cell technology. A lot of the technologies that have been talked about in the past have been brought much closer to commercialization over the last few years. So that's the one point. But the other point is this big global decarbonization drive. That is a big shift change, and that has supported the development and commercialization of some of these fuel cell technologies. Now, if we're going to decarbonize the world, there has to be changes in the way we generate and consume electricity, and fuel cells and hydrogen is a key component of that energy transition. Now, bringing that back to PGMs, these are very special metals, and that's not my quote. One of the mining CEOs always points out that these are special metals, and that's just given their chemistry and their technical capabilities. And because of that, it is our view that PGMs will play an important role in this energy transition, and one application being fuel cells and the hydrogen industry. And there are other applications as well where they will play a role. But to bring it to the second part of your question, why haven't we seen that demand take off yet? I think we've seen an increased demand. We have seen sharp growth in fuel cell demand for PGMs, but it's not big enough to move the needle yet. And the big reason is that a lot of these technologies, although they have been advanced over the last few years, as I've mentioned, although some of them have been commercialized, they are still in a development phase, and it will take some time for these to get to a point where there is mainstream uptake. But again, going back to my initial comment, I do think fuel cells will play an important role in the energy transition. And with that, in time, I think we would see a sharp increase in PGM demand in fuel cell applications. However, if we pull it back to some of the previous questions around electric vehicles, unfortunately, it is our view that fuel cell demand would not be enough to offset some of the losses related to electric vehicle PGM demand in the near term. So there will still be a gap in PGM internal combustion engine demand over the next 5 years or so.
Considering the potential applications of platinum group metals in decarbonization and other sectors, what are the prospects for creating substantial demand for platinum group metals outside of the automotive industry?
One avenue is, as we said, is fuel cells, and then we've seen a lot of market development being done by some of the mining companies to develop some of these alternative markets for PGMs. And again, we have started to see some demand created on the back of that. The numbers are not meaningful yet, but it is starting to grow slowly but surely. But again, it goes back to the characteristics of these metals. They are being used in many, many other industries outside of the traditional internal combustion engine vehicles. And I think there's scope for that use to increase and the wider use of PGMs to start taking off as the world looks for solutions to help them solve the energy transition objectives.
And given the current flux in the platinum group metal sector, what are your expectations for the market dynamics and metal price volatility over the coming year?
Martin, currently, as I said in the intro, I think prices where they are now is not reflective of the medium to long-term supply-demand fundamentals. I think it's driven by short-term distortions, which would then imply that we could see a correction from current levels. However, that being said, we don't think we're going to go back into a strong bull market anytime soon. For that to happen, there's two key catalysts that we watch for. The one is continued sustained global vehicle sales growth. That's very important. We need to see global vehicle sales grow, and the other element that goes with that is internal combustion engine vehicle sales need to increase. By implication, it also implies that we will probably need to see a bit of a drop-off in some of the EV penetration rates that we've seen over the last couple of years, and that's already starting to happen, so that is positive. The other big catalyst in our view is we need to see production being curtailed. Now, some of the mining companies have already started to trim some production on the edges, but the numbers are fairly small at this stage. I think to have a meaningful impact on PGM prices, we need to see more production being curtailed. And it is our expectation that over the next year or so, we would see more announcements to that effect. It's not an easy decision. It's not easy to restructure mines it's very, very hard to close mines and put them on care and maintenance. There are a lot of factors that need to be considered before you get to that point. But for us, that would be a key catalyst, is a reduction in supply. And if we see that in conjunction with strong internal combustion engine vehicle sales, I think we should see a recovery in PGM prices, and a sustained recovery in PGM prices.
That was Creamer Media's Mining Weekly, speaking to Arnold van Graan, the head markets research at Nedbank Corporate and Investment Banking.